Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, it has been a roller coaster of a week here, guys. I guess the big news was our 12-day war with Iran via Israel, and that is now concluded. So, of course, naturally, the market has gone much higher, which is great for now. I'm sure next week we will have another war, tariff, or regular, or some other global crisis that will plunge us all down. Anyway, in the meantime, we're here to talk about tokens, so I will jump right in. So to start, we're going to talk about Celestia this week. So Celestia is the data availability project they launched in late 2023 and kind of kicked off the bull market, as most people say, just because their token from the point it was airdropped really took off. They're actually facing a lot of backlash this week as their TIA token, called TIA, hit an all-time low of $1.32, which is actually down like 90% from their all-time high price of $20. So specifically, the sell-off was really exacerbated in the last couple of days by an ex-user who accused the executive team of selling their tokens during the October unlock. So again, I mentioned that the token or project launched in October 2023. In October 2024, there was a big unlock for team tokens and early investors. So this ex-user, they basically accused the executive team of selling all of their tokens during this October unlock, and then also that they were paying influencers on Twitter and other platforms to basically promote TIA, so people would continue to think it was like a great investment. So one of the project's co-founders, though, took to X to fight back against these allegations, posting that most of the team was actually still intact and building, and that it had a $100 million treasury. And then with its $100 million treasury raised from VCs, the project had about 6 years of runway, which is quite a lot. The other actually piece of this, though, was that one of the other founders did something a bit more constructive, which is they posted a proposal to redo Celestia's token design. Now, currently, Celestia basically provides secure. It's in its own chain and does this data availability piece, which basically anytime the data would normally be posted to Ethereum, as well as transactions, as well as being used for security, that part of that data is kind of siphoned off to Celestia. And the idea is it reduces transaction costs. So Celestia secures their own staking chain and pays their validators by using a proof of stake system and paying nodes for validating that data and validating the chain. Now, what happens, however, is that that means that Celestia has constant inflation regardless of the unlocks. So that's at about 5% annually. The new mechanism proposed would be an experimental called proof of governance mechanism, and it would actually burn any fees that are earned. And the idea is basically ultimately they want to bring value back to token holders, which we love to see. I talk about this a lot. It's definitely a great goal. We're seeing a lot more projects align on that recently. But currently, to be fair, Celestia's fees are super low. They're currently doing about $200 to $300 in fees per day. So comparing that to like $1 billion valuation, kind of hard to work the math back in there. However, as Celestia grows, as transactions on Ethereum grow, the hope is that Celestia can kind of grow into that valuation. But again, Celestia's had a really rough go of it. It did bounce a little on this new proposal that came out, but it's still down 2.9% for the week. Okay, next up is Jupiter. So Jupiter, which is basically one of the largest decentralized exchanges on Solana, they announced last week that they're going to be pausing DAO voting and governance, which most people immediately might be like, oh, wow, that seems like a bit of a hostile takeover by the company. But in fact, it is not, thankfully. The team has really been clear about they really want to refocus on building out the core product and also just rethinking the overall DAO structure. And then kind of the goal of relaunching the DAO in 2026. So, anecdotally, the DAO has definitely been more of a hindrance to progress than others. a lot of DAOs that aren't really organized using things like subcommittees or kind of, delegates, it can get really messy. And as a result, Jupiter's has been very messy. Any type of grant has to go through the DAO. We're talking about, a couple $1,000s as being, people are debating about. And really, it's operational things like that that should be handled by either kind of those at the top or some sort of subcommittee that's kind of doing oversight. So during this period, though, the DAO Treasury and Community Reserve allocations are going to be pausing any emissions of Jupe. And the governance, and that'll be paused for now. So again, this is a bit of an unusual move, but not a bad idea, just considering the burden of decentralized governance. We've seen again and again that DAOs, are very hard and difficult to work with. And in order to do so, you really need to have a really streamlined model in place. Ones to check out that do this well are things like Synthetics, MakerDAO, or Sky. And there's a few others out there as well. Anyway, with this, though, Jupiter is up 4.3% for the week. All right. Last but not least, we're going to talk about Sai. So this week, the Layer 1 protocol Sai has been on a tear after the state of Wyoming announced it's going to be using the Sai Network for its new stablecoin. So the stablecoin, which is called WYST, has selected Sai as a candidate blockchain. So what this means is that while they're kind of evaluating their new stablecoin project, they have selected a number of blockchains that they think would be appropriate for their YST stablecoin. So along with Sai, Aptos, Arbitrum, Avalanche, Base, Ethereum, Polygon, Optimism, Stellar, Solana, and Sui are all being considered, although Sai, according to a post from them a few days ago, is one of the two that they are considering. The token is going to be issued on layer 0, which means it will be omni-chain, though, and can be transferred and traded on multiple blockchain networks. Where it gets initially issued will be, again, interesting to see. WYST is set to launch in July, and it's going to be the first state-issued stablecoin. This is coming hot on the heels of the passage of the Genius Stablecoin Act, which was approved by the Senate last week and is currently in the House, I believe. Sai is up an insane 68% this week. All right, guys, that's all I got for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.